Onto your markets news now. Asia Pacific markets were mixed on Wednesday's. Wall Street saw a subdued session overnight ahead of key inflation data after Fed Chair Jerome Powell reiterated that the central bank is in no rush to cut interest rates. Meanwhile, markets continue to assess the potential impact of U.S. President Donald Trump's latest tariff escalation. The Hong Kong Hang Seng gained 2.4%, while China's Shanghai index is up 0.1%, and Japan's Nikkei is firmer at 0.4% at the close of trade. The U.S. Bureau of Labor Statistics reports key inflation data later today. Inflation in the U.S. has been slowing down but has remained sticky and is still some distance away from the U.S. Fed's target of 2%. Wall Street predicts U.S. CPI inflation to decrease to 0.3% in January. Investors will be closely monitoring the data. The S&P 500 gained 0.4%, while the Nasdaq Composite lost 0.36%, and the Dow Jones Industrial Average was up 0.28%. Back home, the JSE was higher with the all-share index up 0.7% at 88,210. Industrials, financials and resources stocks were all up at midday, and the rand is currently trading at 18 rands 44 to the dollar. It is at 19 rands 11 to the euro and at 22.93 to the pound. A quick look at the commodities. Gold is now sitting at $2,888 an ounce. Platinum's at $1,023 an ounce, while Brent crude is at $76.32 per barrel. Chantal Marx is our market analyst for today. She's from FNB Private Wealth. Good afternoon, Chantal. Always great speaking to you. We are all looking forward to U.S. inflation that is due out today. Wall Street analysts are saying that data is unlikely to go beyond 0.3%. What are your expectations at FNB?
Yes, so on a year-on-year basis, which is just easier to analyze, we expect that inflation will have remained steady at 2.9% year-on-year in January. And that just speaks to how sticky inflation has been in the US. And that remains a headache from a monetary policy perspective, because politically, the administration would want interest rates to go down. But I think that Jerome Powell and the Fed are a little bit more cautious in terms of potential further interest rate cuts.
Yeah. What can we draw, or what parallels can we draw to the current CPI range of the US and what's happening here back home? What parallels can be drawn there?
So the US really wants inflation to average around about 2%. So 2.9% is still very far away from that target. Meanwhile, in South Africa, we really want inflation to average 4.5%, to be between the 3 and 6% target range. And our inflation is actually at around about 3%.
Yeah.
So we have technically, from an inflation perspective, a little bit more room to cut than the US does right now.
Right. Let's come back home. Local data this week. Today, the Psyche releases business confidence index, saying that things are improving thanks to the new government formation. Looks slightly down, but it's still marginally still high. What do you read of the mood and sentiment among business owners at this moment?
So unfortunately, it is slightly backward looking, because the survey was concluded in January, and that was before we had some of this political and geopolitical noise entering the South African system and the South African economy.
Yeah.
But certainly before that, we actually had businesses feeling quite confident about the prospects of South Africa. An improvement in electricity supply, a better performance at ports, logistics, bottlenecks improving a little bit. So it's disappointing that things could be worse for businesses in February, because I think we were on track to start seeing some really good investment again from businesses and some go forward from an economic growth perspective.
Yeah. How much worse do you think things could be because of what you mentioned, the geopolitical tensions and issues around, possible trade wars flying about?
I think the worst thing from a South African perspective is that it could potentially knock confidence. And if business confidence and consumer confidence is knocked, businesses don't invest and consumers don't spend. And that is bad for economic growth. And it almost becomes like a circular motion where, because these things are, the spending and investment is pulling back, growth is weak, and then confidence is again low because growth is weak and it's disappointing the mark. And I think that that's where the biggest risk right now lies from a South African growth perspective.
Yeah, Chantel, tomorrow we're expecting mining production data to be released by Stats SA, and in November it fell down by 0.9%. I know that gold production was one of those that really dragged down the mining production. And just last week at the mining indaba, that was acknowledged about how gold is doing, but that other commodities have been doing well. What are your predictions at FNB about the December figures of mining production?
Well, it's very difficult to say when it comes to mining production because it tends to be quite lumpy. I would want to see an improvement in mining production for December on a year-on-year basis, just because I think that there were some one-offs in the November numbers that really dragged on the output figure. And obviously, if we get a better print in December, there's a chance that mining actually contribute positively to GDP in the fourth quarter. Well, in November, it was only a small kind of positive contribution. And if we were going to see it pull back in December, it could have actually detracted from economic growth in the fourth quarter. But yeah, I mean, hopefully that gold figure actually looks a lot better because that really was, as you mentioned, the sticky point in the November print.
Yes, sticking with mining, Pan-African Resources, they reported a 16% increase in annual gold production. What can you tell us about them and the direction that they're taking as a miner?
Yeah, so I mean, they released results today, and this is after they put out a trading statement and update on Monday. And the share price has been under quite a bit of pressure. But the main reason why is because they actually decided to forward sell some of their gold, and that was sold at lower prices. So they didn't fully benefit from the high gold prices that we're seeing right now. They also had some project delays at one of their projects that they were executing on over the financial year, or the half-year period. But over the next 6 months, they're going to fully benefit from higher gold prices. Their cost structure is actually quite favorable, and their production profile is upward sloping. So I am looking forward to good things from Pan-African Resources for the next 6 months, and definitely for the year beyond that.
Yeah, just before I let you go, just a quick thought on the rand, and it's currently trading at about 18 rands 44 currently. What do you think of its direction?
Yes, so it's very encouraging to see that the rand is strengthening, and it's very encouraging to see that the rand is trading in a pretty tight range between 1840 and 1870, despite some of the external noise. Some of it has to do with, for example, gold prices having been quite high over the last few days, oil prices being relatively subdued. Yeah. But I think generally it's good to see it holding up even with all that noise.
Chantel, always exciting to speak to you, and thank you for always being available to dissect markets for us. Chantel Marx has been our market analyst for today. She's from FNB Private Wealth.